Hello, Steve Koukoulas here, Economist in residence at Zagga, and wow, what an interesting time we've just gone through. The Reserve Bank shocked just about everybody with its on-hold decision on interest rates on the 8th of July. So against market expectations and the overwhelming consensus of us economists who thought that an interest rate cut would be delivered, the Reserve Bank kept rates steady, and their reasoning was really quite interesting. It was linked to the fact that they're not yet confident that inflation's going to be tracking at the middle of their target range, even though the most recent data suggests that we're back on target. So that's interesting. They're sort of worried, if that's the right word, that there could be a rebound in inflation later this year or into 2026. So they're holding rates steady until they get more information. The other element was that they judged the labour market to be tight. They said that the 4.1% unemployment rate at a time when productivity growth is still relatively weak is not totally consistent with inflation returning to target. So it was all about that inflation assessment in their view, that it's not quite locked in at that 2.5% average for the next year or two, which of course is their forecast horizon. Now, on the economy, on the hard news on the economy, speaking about inflation, we did have confirmation that headline inflation in annual terms was down to 2.1% in the year to May. Trimmed mean, which is the underlying inflation rate the Reserve Bank loves, was down to 2.4%. So on the hard data that's before us now, inflation is back on track. But as I said, there are reasons that the RBA is worried about. I'm not so worried about them, but the RBA is worried about that will lock in those low inflation readings. In terms of the other economic news, we know that things like household spending, retail sales are still quite sluggish. There's been a small recovery, I think we can say, on the back of the previous rate cuts back in February and May when the RBA did trim interest rates, that there's been a little bit of more positivity in the consumer side. Consumer sentiment's ticked up a little bit. Obviously, we need more rate cuts for it to really be locked in and to have optimistic consumers in the economy, but there's just sort of the green shoots there that might just be pushed back a few months because of this RBA decision. The other news that building approvals, which did look really good early this year, have just stalled, in fact gone backwards the last couple of months, and at a time when we do need construction, when the housing market's still facing shortages of dwellings, a decline in building approvals is something of a worry. And linked to that, and perhaps the interest rate cuts, even though it's early days from the two that we've already seen, house prices have just continued to edge up. So we've seen particularly the weaker cities, Sydney and Melbourne, starting to record increases in prices. The boom cities, if we can call them that, the Brisbane, Perth, Adelaide, are still strong, even though the rate of increase in house prices in those cities has moderated a little bit. And of course, overlaying all of this is international economic conditions. The tariff war is still unfolding. We're not quite sure where the dust will settle on the tariff issue. There's retaliation and non-retaliation, and President Trump's given an extension on when these tariffs take effect in early August, so still a little way away yet. And of course, geopolitics is still lingering somewhere there. The unfortunate and dreadful issues occurring in Israel, Iran, Gaza, Russia, Ukraine, and then the simmering tensions over Taiwan, which haven't gone away, by the way, are still there somewhere in the back block too, and they could cause not only geopolitical issues, but also impact on the economy. So for the here and now, the economy is still quite subdued. The RBA said that it was not the direction of rates that they were worried about, it was just the timing. So the market still is comfortably and confidently pricing in interest rate cuts. They've just been pushed back by a couple of months. So we'll wait and see what the next inflation reading is, the next labour market number happens to be, because if they're okay and consistent with the RBA's thinking, then the rate cuts will just be later rather than sooner. And I think that's the key issue. But in the meantime, the economy's still a little bit sluggish. So look forward to speaking at the next Zagga event, and so much to talk about. It's a great time to be an economist. So thanks very much.